Terry Ryder has for the past few weeks been filling us in on what makes an area a hotspot. This week I asked Terry to give us the lowdown on exactly what an ugly duckling suburb is.
The ugly ducklings, I think these are one of the most important categories of events that create hotspots. This draws an analogy with the fairy tale, obviously, where the creature was considered ugly because people misunderstood what it was and didn't realise its potential, and it evolved into a beautiful swan. And real estate areas can be like that. Areas that are considered down market can evolve into more upmarket or more desirable places for people to buy real estate. And we've seen that happen in every capital city in Australia. And so we're looking here for areas that are affordable, but they have to be more than cheap. They have to have identifiable drivers that are going to allow them to rise above their current stigma, such as new transport infrastructure or spending of government money, which tends to be followed also by private enterprise money.
So why do you think that those areas make for better investing than, say, blue chip areas?
Because the research tells us so. The industry often tells us that you should be investing in the prime inner city suburbs because they show superior capital growth, but the research totally contradicts that. The best long-term growth in most of our capital cities is found in the more outer suburbs.
What's a stayer?
The stayers, these are the locations that are ideal for people who like low-risk investments. The areas that are going to give you steady growth, at least some growth every year, as opposed to boom towns, for example, which may give you spectacular growth for a couple of years and then values fall away when the resources boom subsides. High-risk type investments. So the stayers are those that they tend to be the middle ring or outer ring suburbs of capital cities, for example. But more importantly, I think the regional centres that property investors tend to overlook very often are stayers. Places like Wagga Wagga in New South Wales, always their median price is always growing a little bit at least every year. Warrnambool in Victoria is another one, Geraldton in Western Australia.
So how can government decisions generate a future hotspot?
In a number of ways. Most of our state governments have regional plans for the capital cities. In Melbourne, they've got the Melbourne 2030 plan. They're also now talking about expanding the urban boundaries and allowing more land on the outskirts of Melbourne to be developed as residential. That's going to have a big impact on those areas, people who own property in those areas. But probably the best example is the South East Queensland Regional Plan, which has just been updated by the Queensland Government. And it's basically grappling with the problem, where are we going to put an extra 1 million people in the next 20 years? And they're saying they're going to channel a certain amount of that growth down the Ipswich corridor, which is already a hotspot, and it's going to remain so because of that government decision.
And what about the negative side of a government decision?
The problem people have in tracking government decisions and making investment decisions based on that is politicians have a tendency to promise things and then not deliver, particularly if there's an election coming up. So very often there might be a new rail link or a new road link promised to an area, and if people rush in and buy based on that promise and find that it's forgotten about after the election, they can end up with a dud investment.